Welcome to PyUncut, where we break down the biggest moves in technology and markets in the simplest way possible. Today's story is about a powerful partnership that is quietly shaping the future of artificial intelligence. Broadcom stock is rising, and the reason behind it is a major deal with Google in the AI chip space. This is not just another tech headline. This is a signal about where the next wave of computing power is going. Let's start with the basics. Broadcom is one of the world's largest semiconductor companies. It does not usually get the same attention as Nvidia or AMD, but it plays a critical role behind the scenes. Broadcom designs specialized chips that power networking, data centers, and increasingly, artificial intelligence systems. Now enter Google, one of the biggest AI players in the world. Google has been building its own custom AI chips for years, known as TPUs, or Tensor Processing Units. These chips are designed specifically for machine learning tasks and are used to train and run large AI models. The big news is that Broadcom is now working closely with Google to design and manufacture these AI chips. And this partnership is becoming bigger and more important than many investors initially expected. So why is the market reacting so strongly? Because this deal tells us something very important about the future of AI. For years, companies relied heavily on Nvidia for AI chips. Nvidia dominated the market with its GPUs, becoming the backbone of AI infrastructure. But now, large tech companies like Google are trying to reduce their dependence on Nvidia by building their own custom silicon. This is where Broadcom comes in. Broadcom helps design these custom chips, making it a key enabler of this shift. Instead of selling standard chips, Broadcom becomes part of the design and production process for highly specialized AI hardware, and this is a much more powerful position. Let's break this down further. When companies like Google design their own chips, they gain three major advantages. First, performance optimization. Custom chips are built specifically for the company's workloads. That means better efficiency and faster processing for AI models. Second, cost control. Over time, owning the chip design reduces reliance on expensive third-party hardware. Third, strategic independence. Companies don't want to depend entirely on one supplier, especially in a critical area like AI. Now think about what this means for Broadcom. Instead of competing directly with Nvidia, Broadcom is partnering with the largest AI companies in the world. It is embedding itself into their long-term infrastructure. This creates recurring demand, long-term contracts, and deep integration into the AI ecosystem, and investors love that. That's why you're seeing Broadcom's stock move higher. But let's zoom out and look at the bigger picture. We are in the middle of a massive AI infrastructure build-out. This is similar to the early days of the internet or cloud computing. Companies are investing billions into data centers, chips, and software to power AI. And chips are the foundation of all of this. Without powerful chips, there is no AI. That's why companies like Nvidia have seen explosive growth. But now, the ecosystem is expanding. Instead of one dominant player, we are seeing a network of partnerships. Nvidia still leads in general-purpose AI computing, but companies like Google are creating alternatives with custom chips. Broadcom sits right in the middle of this transition. It becomes the arms dealer of AI infrastructure, not competing with everyone, but enabling everyone. This is a very powerful business model. Now let's talk about the financial implications. Broadcom already has a strong business in networking and enterprise software. But AI is adding a new growth engine. As demand for AI chips increases, Broadcom's revenue potential expands significantly. And this is not short-term demand. Training large AI models requires massive computing power. Running those models in production also requires specialized hardware. This creates ongoing demand for chips over many years. So when Broadcom signs deals with companies like Google, it is not just a one-time event. It is the beginning of a long-term revenue stream. This is why investors are willing to assign higher valuations to the company. But there are also risks. Custom chip development is complex and expensive. If demand slows down or if AI spending gets cut, it could impact companies like Broadcom. There is also competition. Other semiconductor companies are trying to enter the custom AI chip market. And of course, Nvidia is not standing still. Nvidia continues to innovate and maintain strong relationships with cloud providers. So the question becomes, can Broadcom sustain this momentum? To answer that, we need to look at trends. AI spending is still in its early stages. Companies are just beginning to deploy AI at scale. Governments, enterprises, and startups are all investing heavily. This suggests that demand for AI chips will remain strong for the foreseeable future. At the same time, more companies are likely to follow Google's strategy and build custom chips. That means more opportunities for Broadcom. In a way, this is similar to what happened in the smartphone industry. Initially, companies relied on standard processors, but over time, many companies started designing their own chips to gain an edge. We are seeing the same pattern in AI. Now let's bring it back to investors. If you are a beginner, here is the simple takeaway. Broadcom is not just a chip company, it is becoming a key partner in the AI revolution. Instead of competing head-to-head with every player, it is positioning itself as a critical supplier to the biggest names in tech. That gives it stability, growth, and long-term relevance. But as always, valuation matters. Broadcom's stock has already risen significantly. That means expectations are high. Investors need to watch earnings growth, deal pipelines, and AI demand trends. So what should you watch next? First, any updates on Broadcom's AI revenue. This will show how quickly this segment is growing. Second, new partnerships. If more companies follow Google and work with Broadcom, that is a strong bullish signal. Third, overall AI spending trends. If companies continue to invest aggressively, it supports the entire semiconductor sector. And finally, competition. Keep an eye on Nvidia, AMD, and other chip makers entering this space. To wrap this up, this deal between Broadcom and Google is more than just a partnership. It is a glimpse into the future of AI infrastructure. A future where companies design their own chips, where partnerships become more important than competition, and where the winners are not just the ones building the most powerful chips, but the ones enabling the entire ecosystem. And right now, Broadcom is positioning itself right at the center of that ecosystem. That is why the stock is rising, and that is why this story matters. This is PyUncut, and we will keep breaking down the biggest trends shaping your financial future.